So let's now talk to the property data and sort of tell you a little bit of a story about where we see the supply story going. And supply, to Bryce's point before, we look at building approvals, we look at current stock levels, listing levels as well, and also that housing credit story. So let's start by looking at some of that data, starting with the stock on market. So we want to look at the sort of medium to longer term projections in here and what we're seeing in terms of where the supply of new housing approvals and that is. Now, what it's clearly showing to us is when we look at the decade averages of housing, decade averages of units, we are undersupplied. Okay, so that's the only message you need to hear. And sort of some of the forecasting out there is sort of saying that we'll be 100,000 properties short in that sort of next 3 to 5 years in terms of meeting the demand in the market. So that obviously puts upward pressure on property prices as a bit of an example there. If we actually have a look at some of the recent data that we're seeing in terms of changes in sales volumes, now this is the interesting one to look at. So if we took a snapshot of this data 6 months ago, even 12 months ago, we saw and we were commenting strongly about in terms of sales volumes and listing volumes being as much as 20 to 30% lower than what they had been 12 months earlier and over their longer term average. And so what we are now starting to see when we look at that is the market starting to release new supply. And so that's going to be obviously putting pressure on values on the downside. And so it's going to be interesting in terms of what happens here. And that's our first clue about looking at markets within markets. So we're still seeing that there's going to be some markets that have really low supply but high demand, which are going to see the better returns over the next 12 months. And so I think that's an important message when you start to think about those monthly sales volumes and those averages over time. So we predicted this at the end of last year that it was changing. We were seeing more and more properties come to market, and that's now playing out, and it's affecting some of the growth that's happening in some of those states and capital cities around the country. Let's move now to sort of look at what we also want to be looking at here is the new financing in terms of investor and owner occupiers. Now, we always make sure that you understand that investors over the medium to longer term should be price takers, not price makers. Okay, so we have seen a slowdown in the monthly value of new finance commitments. So that's excluding refinances. But we have definitely seen that there's been a little bit more activity after what we saw. We had a property boom on the back of COVID, record low interest rates. We saw the government's housing building program spike up all of those approvals as well. So it really is important to understand where it sits in terms of that activity. And we're seeing the confident investor still in the market, but we're certainly seeing some of the investors who may have overgeared themselves having to restructure their portfolio from a cash flow point of view because they went too aggressively. And so they've liquidated some of those properties. But that sensible investor who's gainfully employed, who's got a nice buffer, who's got good equity in their property, we are seeing some of them come into the market as they're seeing opportunity in this particular market. And why wouldn't they when you start to think more longer term about that migration and that shortfall of property supply that's going to be in the market? So
there a bit of demand on the ground too there, Ben, can't you? Because there is a real disparity between where just even in the investor, like if you go to, according to CoreLogic, their latest data, in New South Wales, investors are over 40%, which is only the second time in the last 5 years that's happened. Whereas if you go to Victoria, for example, that's in the 20s. In Brisbane, you've got a bit more demand as well. So you'll see that there's a real disparity across the state. So we're talking at a headline level here, but you can also follow the bouncing ball and see where some of the demand actually exists from investors. And it kind of, on the back of some of the clearance rate activity, which we'll get to shortly as well, that we've seen to start the year as well, is interesting to watch. But there's a clear differentiation across the states where a lot of that demand exists for where those new finance commitments are.
Yeah, and obviously this is the science, right? So you're looking at the supply side, which is really a strong story that there's a lack of it, and even though some of the new listings are sort of trying to bring that back into balance, when you start to think about the demand story, you're trying to get those nuances right. So let's just think about